Hey YouTube, this is Zach with Achilles Financial, and today we're going to be finally doing my stock review of STEM's earnings this past week. So you can already see, based on Friday's closing price of $14.45, we are significantly higher than my earnings preview video. You can even see on the chart this year over the 1-year performance that we had a very strong past month. However, we're down overall. So something to call out, the market capitalization of this company is now $2.2 billion. This is $1 billion more than it was 1 month ago. So I do want to call that out. I also want to call out another metric right here, that the percentage held by institutions is lower than it was at the beginning of this year, but still remarkably strong at about 55%. And this is a lagging indicator, as I believe that they are tying those out on quarterly basis, potentially monthly. So why do I want to talk about STEM again? Well, one of the key components is A, there was a lot of information that came out in that earnings report, and B, as of the point in time that I'm filming this video, which is August 7th, and this is around 6 o'clock Eastern time, they just passed in the Senate the Inflation Reduction Act, which I have a lot of opinions on that are not necessarily favorable in terms of how the bill relates to overall economic performance. But it is undeniable, should it pass, which I believe it will due to the party alignment in the House, which the bill will still need to go through, as well as the president. I do believe that it will pass, and I do think that it will be beneficial for the bill or for STEM itself. And a lot of that information you can see in alignment with when the stock started to really pop off, when they were doing some of the edits on the original bill. So if we look at this over like the past month, you can see the day and time where it actually really took off. So again, the stock is up from the recent lows where it was under $7 a share, or under $7.50 a share. Earlier this year was under $7 a share. And now we are sitting up $14.50 at one point in time. It was $14.90, I think, is where it topped out on Friday. So one of the things that we're going to be looking at is how is it going to perform this week? Is it going to get out ahead of itself, or is it going to kind of find a new trading range? So this is what we're going to look at in terms of the stock, in terms of what I was looking for, what came out, and maybe some additional news. And we are going to be going to the earnings report for that information. So this is the STEM Q2 earnings report. This came out last week. It is available on their website. I do have a video of their earnings call on my channel. Apologies for some of the noise issues associated with that, but I think I've got that figured out, so we'll do better next time. So again, this was a stellar quarter. The company did come out, and the number one item, record revenue. This came up 246% growth year over year, but the main thing I want to call out is they were ahead of their guidance range, above expectations. I said they are going to need to come in more than 45 million, which was kind of the midpoint, or 40 million, and I was kind of looking for somewhere between 45 to 47 was my expectations, just slightly above, and you can actually see that they beat that pretty significantly, coming out for $67 million. The other thing I said that I wanted to watch was going to be those margins. Are we marching towards a path of profitability? Both of those margins did see growth, and one of the things that I would call out associated with that, and why I'm very happy with those margin growth, is that for every project they're looking to complete this year, a lot of those projects are going to be heavy hardware, which is going to be very beneficial from the large revenue contracts. However, they have a much lower gross margin, which means they are less profitable for the company, but they bring in those big dollars and they enable those high dollar software contracts, which do have high margins going forward. They came out last quarter with this idea of this CAR, this contracted annual recurring revenue, very similar to kind of the SaaS framework, which is how STEM sets itself up. Software does have a much higher multiple than any hardware. Then you can see right here that $58 million. This means that this is money coming in that they do not have to go out and get every single year. So generally speaking, in software, you're going to see recurring revenue trade for anywhere between 7 to as much as 12 times revenue. And right now you can see that this is most likely what they're aiming for by bringing this to the forefront, meaning this could add anywhere from 300 million to as much as 600 million in total market capitalization to the overall company. I will highlight I'm talking revenue, not profit, because the company continues to not be profitable. However, again, between the metrics right here of the growing revenue, as well as the fact that the company continues to have a growing gross margin, which is going to be good, we are still in line for profitability late next year at this point in time. Something I will call out, I also said, hey, we need to hit big numbers revenue, but we can't see that backlog or those contracts continue to decline. And this was, I believe, and don't quote me on this, but I believe that this was the largest quarter for contracted revenue, and they did continue to blow it out. I expect this to continue to be a big deal for them. Then on the slide, you can also see Energy continued to get some positive information associated with their rankings, just highlighting where the tech is. So from a pure numbers perspective, incredibly happy with the quarter, and I think that as an investor you have to be, because they're not just meeting expectations, they're beating expectations, and they continue to line out a clear idea of, hey, this is what we want to do, this is where we're trying to go, and this is what we're doing to get there. So very, very transparent. I think this goes a long way in building back some of the credibility that in the industry, or at least in myself personally, I don't know about for those of you who have also been longer term shareholders, but they lost some of that when they came out with great news right the day of or the day before that they announced Q4 earnings, and then they did a big miss. So this is going the opposite direction, where they are saying, hey, we had these expectations and we are beating them. So I much rather prefer to be on that side of the calculation. Again, a lot of that information is going to be in here. One of the things that I want to talk about is as they continue to grow, they're talking about, hey, we're really focusing on these energy storage systems with the goal is to build these out, these big projects. Thanks ERCOT from the Q1. Again, they're working with essentially the state of Texas to work across the board, build out these energy products, and then do the software contract with them so they can build up these big recurring pipelines. And these energy storage systems are going to be the way that they are going to be able to do it. This is going to make up the vast majority of the new projects that we're working on this calendar year. And again, that's going to have a huge benefit. The other side is going to be the solar asset performance. This is largely in line with what we were seeing from Also Energy, a much smaller portion of what you're going to be looking at or leveraging. However, it's something that, again, I think is going to be beneficial for the company, and we'll continue to watch how that kind of flows through the overall portfolio. But the next thing I want to talk about is this Inflation Reduction Act, which on the earnings call, they highlighted that any potential benefit from this deal is not included in any of their projections at this point in time. If this does go through and we continue to see some of the outflow of it and see how it could impact, one of the things that I would expect to see is potentially a negative impact to net income. And what they would do is they would look to hire on more individuals, whether in sales capacity or in the engineering side. The engineering in particular are not going to be inexpensive hires, but that will enable them to go and build more and to be able to take advantage of the Also Energy branding, where they're going to be able to go out for the storage retrofits that you can see right here for all of their clients. They're essentially going to be able to go to all of them and say, hey, would you like additional services, because it's going to be subsidized. So they are actively talking with a number of those individuals. This is huge for the company, and I think it will have a material impact on both revenue and profitability, and it'll bring forward a lot of sales that I think may have been 3, 4, 5 years out, especially from the EV credits that you're expecting to see, the home credits expecting to see, as well as some of the incentives from a tax subsidy perspective in relation to the corporate side, the commercial side, because as I want to highlight for everyone here, that STEM is not a big player in the residential market at this point in time. So there's a lot of information in here. If you are a investor, highly recommend downloading this. I have the link in the description. It is great. But there's a lot of good information in here. I'd recommend you check and get out, but I'm going to focus now on the financial metrics and call out some of those items. And if you're still here and you're enjoying this content, please leave a like and subscribe. I cover STEM extensively, and we've got a Discord, which is linked in the description below. That's free to join, and we have a channel dedicated to STEM, and there's a lot of the crew in there that keeps some great information coming through there. So to the financial metrics, one thing I want to call out when we're looking at some of these items that you have to remember, last year we had some crazy movement in the overall profitability of the company associated with warrants. Those are no longer going to be associated with the company. They purchased or exercised all of those. So everything we have this year is a lot cleaner from a numbers perspective. And these revenue numbers just continue to show monstrous growth. These are the quarterly numbers. So Q2 of last year, Q2 of this year. But on a 6 month basis, which we'll see down below, we're just seeing massive growth on not small numbers. And I can't think of another company that has this clear line of sight to 100% revenue growth at the scale they're doing. I mean, we're talking more than $150 million of growth this calendar year. And they're doing so with a clear path to profitability, which is just remarkable that they're able to do that. So as we can see that growth occurring, and then the adjusted EBITDA, I hate adjusted EBITDA as a metric because it's full of garbage, and we can talk about that. But this GAAP gross margin is the one that I want to talk about. We're profitable this year on a GAAP gross margin basis. So still not net profitable, but we are actively going towards that direction. So that's what we're going to be watching on a go-forward basis. From an operating metric perspective, look at this backlog. You're talking nearly $500 million of people who have signed a contract. This is not like EV companies and orders where it says, hey, put $100 down and I may or may not be able to get this vehicle at some point in the future. This is a client saying, here, I have signed my word. We are going to be purchasing this service. And in some cases, that actually means getting that money to the individual. You can also see that contracted annual recurring revenue going up. We talked about that earlier. And you can see the assets under management for storage and solar are continuing to grow year over year. Again, more than 100% or more than 1 gigawatt of growth here in the storage section. And because also energy wasn't a part of the mix last year, that's not applicable here. Growth on growth. It is stellar. Again, the sales are doing really well. And they have a strong, attractive offering. I mean, we're essentially saying we can save you money as a company. STEM is going to individuals saying we can save you money. By the way, this is going to look good from an ESG perspective. This is going to look good from a cost to return on investment perspective. And now potentially the government's going to subsidize it. So they have a very attractive offering. As we continue to scroll down through here, you can see some of that growth going forward. The numbers to hit for Q3, Q4 are going to be 70 to 95 and 175 to 225 million. Something that I would call out for the full year is that they raised bookings targets. So this number right here, they raised this target. Again, that's a pretty substantial increase, but they did not raise full year revenue. So the question still continues to be, are they going to be able to execute on the amount of business that they're bringing in? And if so, are they going to have to hire people to do so? So this is a big difference between what was originally projected at 15 to 30 million in adjusted EBITDA. We want that positive cash flow. So the question is going to be what trade-offs are going to be made between revenue, bookings, and profitability, and how's that going to come across through this calendar year? Every time we talk about STEM, I talk about the fact that, hey, I'm a big believer in the company. I think there's a lot to love about it, but I also want to continuously call out that they are still not profitable, and that poses risk. And while they have a clear line to profitability, let's say something happens with this bill, something changes from a macroeconomic environment that can negatively impact the company. And so you have to be aware of these risks. The reason why I call that out is I personally have a material percentage of my net worth is invested in this company, but I also have other investments via mutual funds, S&P 500 related funds. So I don't recommend putting all of your eggs in one basket, even though these numbers continue to show very, very well. But the company is still not net positive. They are still not profitable at this point in time. That all being said, I am by no means a financial advisor. I'm just some guy on YouTube providing his opinion. But I want to call that out because when you see slides like this, again, the numbers continue to be very, very impressive. For the key takeaways, I'll leave this up on the screen just why I kind of call out some of my key takeaways. The thing that I want to focus on is going to be that bookings growth. This continues to show strength in the leadership of the sales team and the company there, where they are continuously going out and highlighting, hey, we continue to perform very, very well. Do you want to work with us? And people are saying yes. And that confidence continues to bode well in a growing industry, especially if they can go out and capture a lot of this. Additional items to watch are going to be the fact that we're going to continue to see that contractual annual recurring revenue is going to continue to grow. The more and more of that we see, the higher percentage that I think we're going to watch the market capitalization grow for this company. At this point in time, on a trailing 12 months basis, the company is still trading at a very high multiple to sales. At the end of this year, that multiple could be cut in half. So there's still opportunity there, especially if they continue to grow that recurring revenue component. I want to see that overall revenue grow as well. To call out some of the metrics down here below just for the group so I can showcase that, revenue right at 67 million. More than 3x what we saw at the end of 2021. On the 6 months ended, you can see that we are currently sitting at $108 million. However, I want to showcase that net loss for the calendar year does sit at $54 million. Now again, we've seen some impressive growth from the operating metrics, in particular associated with the bookings. If you're new to the channel, you'll notice that I have not once talked about the pipeline, and I am not going to talk about pipeline because this is a made-up number, and I don't think that it's worth anything. What is a lot more impressive is looking at these bookings numbers right here. Other companies don't include pipeline in their sales. Look at Microsoft, look at Apple, look at Salesforce. We're going to focus on bookings and contracted backlog because those numbers are real. Sorry for whoever made this slide, but my opinion differs. Admittedly, I probably make less money. So want to call that out though, and why I don't like that. You can also see those reconciliations. One thing that I do want to call out that is actually down here on one of these slides, the reconciliation of net loss to adjusted EBITDA, is this calendar year we have seen stock-based compensation of right at 12, nearly $13 million. I know that there's been some consternation and some frustration with the fact that we've seen some large sales, in particular from the CEO, John Carrington. However, it's important to note that he is continuing to get stock-based compensation that he's going to have access to. And also, he was in early. He has some very attractive stock options. He's going to want to take some of that money out. As long as he still maintains a material exposure to the company, I'm not going to be overly concerned. However, it can be frustrating to see someone who you see championing the company continue to sell those shares. That being said, as I just mentioned, those are some large dollars, and it's beneficial to have some of that in cash versus a what if, again, all-in bet on a single company that is out there. So something that I'll come back over up here, you can see hardware versus services. They continue to equal pretty closely. One of the things that I would expect to see on a go-forward basis is some pretty large increases to the hardware side, or rather to the services side, in particular associated with also energy. And for the metrics up above, you can see those total revenue numbers. So the last thing that I'll call out is, again, for the definitions that they have here, is this pipeline, which again is the stuff that we think is going to sell, which is why I don't like it. Bookings is one of the things that I really like because, again, it's expected for 6 to 18 months ahead of the installation. And these are companies that this is going under contract. They are contractually obligated to be working with STEM, and that is a big advantage. So again, there's a lot of about the company. I'll continue to cover that live on the channel and on my Twitter, both of which you can find right here. And if you've made it this far and you find this content helpful, please leave a like and subscribe. Thanks for watching, everyone. I'll talk to you later.